Anton Krieger here. This episode of All Things Green is brought to you by NextGen Clean Energy Solutions, your sustainable easy button from concept to completion. Welcome to All Things Green. I'm Anton, and today I'm joined by two very special guests. Bill Vogelgesang and Lynn Carpenter own EPOCH Pi, a B Corp certified investment bank serving purpose-driven businesses. Bill and Lynn, thank you so much for being here with me today.
Thanks for having us.
Absolutely.
Your company, EPOCH Pi, is an investment bank that embraces conscious capitalism. Could you tell our audience a little bit about what that means?
Sure thing. You tell them.
Bill, you're up.
Right. So we formed EPOCH Pi in order to serve this this constituency of companies that are trying to create value for all stakeholders, not just the investors. And so they have unique needs. Most of them have a mission, what's known as a higher purpose.
Yeah.
When they want to sell the company, or if they're bringing on an investor who's going to have a board seat, voting rights, things of that sort, they want to make sure that there's alignment of values. If it's a merger, they're very interested usually in alignment of, culture. And so we bring those elements into the traditional investment banking process.
So it sounds a lot like the businesses that you are working with, the purpose-driven businesses, are businesses that are taking care of the shareholders and also the employees at the very bottom. Is that kind of more or less correct, or can you tell me more about that?
Well, I probably wouldn't phrase it sort of top to bottom. It's really companies that are taking all of their stakeholders into account, the entities and people that have an impact and that business impacts through its operations. So employees, customers, suppliers, the community within which that business operates, the environment, and there could be additional stakeholders depending on the kind of business.
I really like that. So it's not just people who are making money, it's the community, it's the environment that's being impacted. Those are all things that sometimes I forget about. Like, businesses have so much larger of an impact than just things that make people money, right?
Right. Well, right, and making money is important.
Yeah.
I mean, a lot of people say no margin, no mission. And so this isn't concessionary. It's companies that when they operate this way, they actually outperform their competition because the ecosystem has a vested interest in that business because they do balance the interest of all the stakeholders. It's not just maximizing value for the shareholders, but it's taking all of the stakeholders into account.
Yeah.
Many of which have opposing interests, and so it's trying to balance those opposing interests to create mutual benefit for all of the parties as best you can.
That makes a lot of sense. And when we spoke earlier last week, you shared your origin story of how you kicked off your company. Can you talk about that and how you guys have evolved since then, and was becoming a certified B Corporation part of that evolution?
I like to tell this story, so I hope that's okay.
You're on the sidelines for this one, Bill.
I don't like it as much when she tells it.
Well, you can give us the
No.
you can give us
Yeah,
your
you
side of
get
the
the
story
take
afterwards.
after I tell the story.
Yeah.
Bill and I have been working together, 20 years now, and probably 15 years ago, he was reading books on consciousness and philosophy and was Googling his next read. And in the Google feed, an article with the title Conscious Capitalism written by John Mackey appeared, and it was a 15-page PDF talking about conscious capitalism and Whole Foods philosophy around having a higher purpose, conscious leadership, conscious culture, and a stakeholder approach. And Bill read the article, and he sort of had an epiphany, and said, I don't know how we're going to incorporate this into our business. The capital markets don't necessarily embrace a stakeholder approach, but obviously more of a shareholder approach. And he said, we're going to figure out how to incorporate this into our business. I don't know how, but we're going to find a way.
Yeah, so that 15-page PDF sounds pretty impactful, Bill.
Yeah.
What's your dissenting opinion on her story.
Yeah, no, it seems very much Bill-centric, which is an overstatement. But I think I was moved by the fact that businesses are a much more complex organization and an entity. It's really a social entity where you have to coalesce, all the stakeholders for the benefit of the company. And the shareholders are but one stakeholder, a very important stakeholder. I like the analogy that, profits are to a business what air is to we humans. And while we don't exist to breathe, we have a purpose beyond breathing, we still need to breathe. And companies need to make money. And so by no means do we minimize that. But there was an interesting study published in a book called Firms of Endearment, which I think was published around 2008, that showed about 25 public companies that embrace this philosophy. And those companies outperformed the S&P 10 times over 15 years.
Wow.
And so that really hooked us. As while there's something, significant going on, this is a better business model. And I think as we've studied it and worked in it, you're really creating sort of a virtuous cycle. You're focused on making employees self-fulfilled. They execute better for the customer. The customer has, better affinity for the company. Suppliers are treated like partners, not as, just ground into the dirt for lower prices. And so you have this virtual system that maximizes, everyone's outcome, even though, as Lynn said, right, suppliers and employees want to be paid more, customers want to pay less. So it's a tension that management has to hold.
Yeah, you got to balance all those interests.
Yeah, that makes a lot of sense. And for the audience, I am Gen Z, and when I think of a bank, I think of somewhere where I go to get a debit card from. That's not you guys, right? Can you guys share some simple examples of the kinds of transactions that take place at your company?
Yeah, in the capital markets, you sort of have two, broad silos of banks. You have what's known as commercial banks. So those are the banks that offer you checking accounts and credit cards and things of that. And then you have investment banks. And in the large organizations, the Goldman Sachs, we're in Cleveland, Key Corp, you have both functions. But there are some 5,000, investment banks in the country. Some of them are one people, some of them are, thousands.
Yeah.
And so we focus on corporate transactions. We're financial engineers. We help companies do transactions like raising capital to buy a company or to grow. We help them sell the business. We have an expertise in the creation of employee ownership companies.
Very cool.
So it's things like that. They aren't. We don't serve consumers. We serve corporations.
Yeah, employee-owned companies are really important. I'm so glad that you guys are doing good work like that, from taking just one owner to expanding it to employee-owned. Great Lakes Brewery, right?
Right.
One of my favorite places to drink beer, employee-owned.
Yeah, they're in Eastside. That's right.
That's right.
Yeah, that's very cool. Tell me a little bit more about impact funds. When we talked last week, you had a differentiation between impact funds and traditional investment funds. Can you tell me a little bit about raising capital through those two different avenues?
Well, so I guess the way I'd approach that is, right, so often companies come to us and they say, we want to raise some capital or we want to sell to an impact fund, because impact funds are often perceived to be well-aligned, values-aligned, that they are looking at financial returns, but they're also looking at other impact metrics around ESG, environmental, social governance. What we often tell our prospects or our clients is, yes, we'll definitely go to impact funds, but it is still a small piece of the pie in a larger environment where traditional funds are still predominant, and we will screen for values alignment. So there may be traditional funds that may not lead with impact, but they very well may be values aligned. And so as part of the process, as Bill alluded to earlier, we screen, we bring into the process questions around values alignment, culture, values, leadership style, people philosophy, metrics, how do they measure success beyond financial metrics, communication styles and skills, and change readiness. So we bring all these things into the process that can help our client best identify not only maximizing enterprise value in terms, but the alignment of values with whoever they're going to partner with.
I would just add that I think with time the lines are beginning to blur. So you have some of the largest buyout funds in the world, KKR, Bain Capital, Trust Company of the West, and others who are managing perhaps $100 billion, but they've also raised smaller impact funds, and now those big brands are on their second and even third generation, and the first generation might have been $1 billion fund, which sounds like a lot, but for them that's nothing.
Okay.
And now they're raising, $3 billion, $5 billion funds.
For impact.
For impact.
For impact.
So there's more and more money coming into this impact investing space.
Okay. That's amazing. So the impact investing, to summarize, those are kinds of like the funds that are, well, can you maybe explain that a little bit further? Like, what is an example of an impact fund?
Well, I kind of alluded to it earlier in terms of, right, so most funds are going to look to make financial returns, return on investment, cash on cash returns, but impact funds will look at metrics and I keep using the word impact, but metrics around making a difference beyond just financial returns.
Yeah.
So around environmental impacts, around social or people impacts, creating jobs. We have a client in regenerative agriculture, so their process uses less water, a reduction in GHG, less waste and perishability, as well as the creation of significant and well-paying jobs. So they measure things beyond just financial, and what are you doing beyond just making money? How are you impacting the community and the people that you're serving?
Yeah, there are literally hundreds of these specific measures that these funds will use and companies use to measure these, very specific areas of impact on the environment or on people, and so there's a whole world of impact measurement out there.
Yeah.
The underpinnings of which sort of started with the UN sustainability goals. So.
Oh, that's a perfect segue, because I know we talked a little bit about the United Nations Sustainable Development Goals, or SDGs, yeah, that serve as a global foundation for measurable impact. How do the SDGs translate into the banking world?
Yeah, well, there's 17 SDGs, and I think there's 100 and some sub-goals to that.
Wow.
And they're all focused on trying to eliminate poverty, reduce greenhouse gases, and create more equity, in the world. So they're different focuses, and then there have been that's been generally accepted as sort of a broad framework. And then there are specific frameworks like the Sustainability Accounting Standards, which are now being adopted into all public reporting. So there are some 80 industries, different measurements for different industries, and that's kind of how the UN SDGs have manifested into these frameworks for measuring a company's impact. And so there's a lot of talk, this is more advanced in Europe, than it is in the United States. But the Securities and Exchange Commission is, looking at requiring U.S. reporting companies to report on these. Well, they already have in a way, but more specifically, they're looking at requiring them to report on these metrics to their stakeholders.
I wonder if we had covered maybe something similar. Maybe you guys know about this. California requires a company that makes perhaps over $1 billion annually. They have to have certain reporting requirements. Is that kind of what you're talking
Yes.
about, but with other countries?
Yes. So last year, the European Union adopted some rules, and there's been great pushback in the United States for the implementation of those same rules. California, naturally, leading the charge on that, as in all things. And so that's primarily focused on reporting of greenhouse gas emissions, and which is a very complex issue that would take many podcasts to talk about.
Oh, yeah.
But
Well, we talk about it here.
yeah,
Yes,
good,
we do.
good. Well, we need somebody to. But the important thing is that the great hubbub in the United States is more about channeling political energy than reality, because there are already 50,000 companies that have to report under these standards in the UK, or not in the UK, but in the European Union, and virtually any company in the U.S. of any size is selling into the European Union. They're having to comply anyways. So this effort is well underway, and it's not going to be reversed.
Okay, interesting.
Yeah, the only thing I would add is, right, the SDGs are a framework for impact, right? And each of the 17 have their specific focus. And so, right, for our clients have an impact on, I was going to say one or more, but it's usually 3 or more of those SDGs. So it's a framework of how these companies are positively impacting, influencing their operations, right? We talk about materiality. So companies that have materiality in their impact. So, right, KeyBank is going to have a different materiality impact of their operations on the environment or stakeholders than, Eaton Corporation or a manufacturing company. So the thought is, right, companies should focus on those areas where they most negatively impact, and how do they move the needle in improving their sustainability and their negative impacts on the environment and elsewhere.
From your perspective, is there any companies out there that are able to try and hit all 17 of those SDGs, or is that like just taking on too much?
Not that I'm aware of.
Okay.
Yeah, I'm
it's a
not
lot.
aware of. I'm sure there are, but I suppose that an investment company could probably say, well, we're invested in all these different companies, and therefore we're
Hitting all of them.
hitting them
Yeah.
all. But no, the concept, Lynn hit it on the head. The concept is materiality. An insurance company doesn't have to worry a great deal about its greenhouse gas emissions. A car manufacturer does.
Yeah.
So, on the other hand, percentage of women in executives and people of color, that's a big issue in banking.
Yeah.
It's a big issue everywhere, but that's material in insurance. So different standards for different industries.
Okay. Yeah, that's really interesting.
Yeah.
What other things would you guys like to share with the audience about your job as investment bankers? Is there anything that you would do to encourage young people in getting involved financially, or what can the average individual do to make an impact on the environment with their banking?
Yeah, I'll take a stab at this, and Lynn can add
on.
more depth. But it is a growing field. It's not growing exponentially, unfortunately, But almost all of the big banks, almost all of the big investment banks have some sustainable finance operation. It might only be a few people in an organization with thousands and thousands of employees. So this is growing, and as the millennials and Gen Zs become an ever increasingly larger percentage of the population, you're driving that change, and so that's really largely what's precipitated this. Is your generation sort of came out of the womb thinking differently than did the previous.
How so?
Yeah.
Tell me how.
I wish I knew how, but
Yeah.
you have. I mean, it's true, and I do think that, there's pressure from the bottom up, so millennials and Gen Z, which is causing pressure from the top down, meaning institutional investors are now asking private equity funds, how are they measuring things beyond just financial metrics? How are they measuring impact? So from our world of capital markets, it's still small, and people sometimes still look at us with two heads, but it's a growing field because there's this bottom up and top down pressure of people asking, what are you doing besides just making money? How are you impacting the culture? How are you impacting the planet? How are you impacting the people? And so it's growing, and I don't think it's going away, even with the healthy dialogue that we're having, that some may not want it or don't think it's important. But I think having additional dialogue and information around ESG and around companies' impacts, whether they're public or private, is beneficial to all of us. And I think in terms of sort of the younger generation getting involved, whether it's in capital markets or in investing for their values, there are ways to do that. There's platforms, and there's Sustainalytics, and there's MSCI ESG funds and ETFs and platforms like GIN, the Global Impact Investing Network. So there are a lot of avenues and platforms and information sets that the younger generation can research and get involved in so that they can invest in alignment with their own core values.
And I think it's important, to bring your values to whatever you're doing. So, what products you consume. Be a more educated consumer. Where you work, right? Do you want to work for a company that doesn't share your values? Probably not in the long run. And how you invest your money? Invest behind those companies that share your values. So I think that energy will continue, this trend.
And it will serve all of us.
Yes, yeah, we think.
That in the end is what our mission is to help good companies do good things, impact the world positively so that we all win. And when that happens, we'll all be in a better place.
You guys did a wonderful job. You brought it right back around for me. You guys are naturals.
Right on.
I'm really looking forward to the next time we can bring you on. But in the meantime, is there anybody that you'd like to shout out to the audience? Anybody who's maybe helped you along on your journey, or anybody?
Yeah, I think Chuck Fowler of the Fowler Center at Case Western Reserve's Weatherhead School. It's the Fowler Center for Business as an Agent of World Benefit. He and his partner Bill Conway ran a company called Fairmount Minerals. Essentially started here in Cleveland, became a public company. It is today, not under that name. But without Chuck's energy behind this, we'd have never gotten Conscious Capitalism or our little firm off the ground. So
Yeah,
he's
he
been a
shared our values
real
and
thought leader, and the
was very
Fowler Center
supportive.
continues that.
Bill and Lynn, thank you so much for coming on the show. I'm going to let our viewers know how they can stay in touch with us. If you'd like to stay connected with the show, be sure to follow us on TikTok at ATG Show. And if you'd like to rewatch full episodes, check out our YouTube channel, All Things Green Show. You can find all of our sources from today's episode in our show notes. All Things Green will be back in 2 weeks. Thank you so much for being a part of the global sustainability movement.